Everybody thinks the Fed is going to save us. Let me ask it a different way. Does the Fed need to save the U.S. economy?
Look, today's data confirms that the baseline case is stabilization, not recession. And we've seen a huge sentiment swing in that direction, as you know, over the last few weeks. Now, we had the Fed this week saying we're not planning on going any lower. For me, it was unnecessary to be quite as firm as Powell was. You're giving up optionality there before it's really certain which way things are going. But there was an important second message there, which is we might not be planning to go lower, but we're expecting to stay low for longer. And I think that could potentially be very exciting for equity investors.
What about inflation? Obviously, Chair Powell is watching that pretty closely, and he wants to see that accelerate. How are you marking inflation, and what are you expecting there, how it informs Fed policy?
So I think that's exactly the crux of the issue right now. What I think was important from what Powell said this week was that rates are likely to stay low at these current low levels, potentially beyond the moment at which the growth scare passes, because the Fed needs to lift inflation expectations. Now, my own view, I think probably the view of most people in the market and most people at the Fed, is that's going to be a slow grind at best. And this is what's exciting for equity investors. If we carry on down this stabilization path, equity investors may be able to have their cake and eat it. You get the green light that, in fact, everything is going to be okay on growth, but you get to keep the low rates for an extended period because the Fed needs to push inflation and inflation expectations up. That's a great combination.
It's Karen. Let me ask you something. Let's say we start to see some strength in Europe. Do you think that the Fed is still so far above where the ECB is that they don't need to react to that at all?
So I think the Fed, is taking into account, obviously, what's going on in the global economy, global markets, also these risks, the trade war risks, the Brexit risks, which seem to have come down, though they certainly haven't gone away altogether. So if Europe does firm, as you suggest, then that's one additional input into the Fed's calculus. But my interpretation of what they said this week is they think they've probably done enough to deal with the growth risks, but they won't move rates back up again until not only has that growth risk passed, but also inflation has made a significant and persistent move up that's confirmed in these indicators of inflation expectations. So better growth, you might keep the low rates, at least keep them for quite a while.